Happy Saturday. I'm RJ Baxter with Choice Mortgage Group, your mortgage planning partner. This week I'm going to go through a divorce planning case study, but before I get into that, I wanted to let you know about a CE class that I have coming up this week on Thursday, October 2nd, starting at noon. This class is around divorce planning, and it's entitled Budgeting and Housing Wealth Management for Divorce Situations. If you'd like to register, if you'd like to attend this class, please pre-register because I need to plan for the food. This is a lunch and learn format. We're going to be going over a lot of different case studies and strategies around divorce planning when you're thinking about the financial picture and the mortgage side of the balance sheet. So let's get into the strategy for this week. So this case study involves a couple that when they divorced, they had two properties. One property was worth $1.5 million. The other one was worth $1 million. Spouse A, they acquired the $1.5 million property through the divorce settlement, and spouse B kept the $1 million property. So to make up the gap, they drew up what's called a property settlement note, where spouse B entered into a payment agreement to repay spouse A over time through this settlement note. There's a couple things to think about when we're talking about mortgage planning and financial planning around a property settlement note in a divorce situation. So let's talk about those things. So the first is that if the note is unsecured, it can be discharged in a bankruptcy. So it's really important for spouse A to secure the note on the property. So to place a lien on the property so that then spouse B is obligated to pay that back and can't discharge it through a bankruptcy. The second one is that principal repayment on the note is not taxable to the receiving spouse. This is really important from a tax planning perspective when we're thinking about cash flows for the receiving spouse. The next is to have an auto payment structure in place to avoid any potential conflicts or confusion around the payments. And then the last thing from a mortgage planning perspective is that we can use the income from this property settlement note to help spouse A qualify for their new mortgage. So this is really important. It can be a savvy way to help spouse A, as long as it's agreeable to spouse B, obviously within the divorce settlement, to go into a payment agreement like this. There's two caveats to this though. The first is we have to have proof of continuance of the income for at least 3 years. And the second is that we have to have a 6-month payment history of on-time payments before we can use that note payment as income. So I hope that helps you out in your financial advisory practice. If you have questions about this or any other financial planning scenario around the mortgage side of the balance sheet or divorce planning, just give me a call, and I hope to see you this week at the CE class. Thanks a lot.